Hi, hi traders, welcome to the Daily European Open webinar with myself, Senior Account Manager Adam Howes. This is a daily webinar that we conduct on one of the most volatile times of the market, around the 4 p.m. Open in Europe, closely followed by the London session at 5 p.m. and then heading on to the US session a bit later on. So what we'll do is we'll have a look through, it's really going to be focused on daily technical pairs and having a look at fundamental and technical data to support a view on the market. We'll have a look at a couple of trade suggestions as well, just to point you in the right direction. Bear with me if I'm a bit sniffly. Hay fever season is on its way as well. Okay, just general advice warning before we begin. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. Okay, so as always, we'll have a look at the fundamental data for the rest of the week coming up today. Pretty quiet night ahead as far as the economic announcements are concerned. We only look at high impact announcements on the market as being market movers like GDP, unemployment rate, so forth and so on. We had the unemployment rate come in for the Kiwi dollar at 8.45 this morning, bang on target. But then we saw a little bit of a negative on the employment change, which saw a little bit of a decrease in strength, or weakness rather, on the New Zealand dollar against the Aussie dollar. We don't have anything major coming up tonight, but Wednesday is sort of like a peak time in the market, like a bit of a bell curve where we see a lot of volatility, a lot of liquidity in the market, a lot of buyers and sellers. We should see some, pretty big moves, pretty big volatility overall over that session. We look forward tomorrow to the GBP Bank of England rate decision, pretty much with 100% certainty, leaving rates on hold at 0.25%. Also got the asset purchase target and the England inflation report. Now, obviously, inflation is very much directly tied to interest rates. Higher the inflation, the higher proposed or the higher the chance of interest rate increases to combat that inflation. If we get higher interest rates with the currency, then usually it's taken as bullish for that particular currency. But should see some volatility around that announcement as well. The big one will be, obviously, all eyes will be casted to Friday with a lot of data coming out for the US and obviously the Canadian dollar. Having a look at non-farm payroll and the unemployment rate. Had a look at non-farm payroll, forecasted of 180K. The previous was 222. We had a look at a preliminary report that just came out for ADP employment at 190K, so it was a little bit better than forecast. But we will be watching that announcement closely. Got the unemployment rate of 4.3%, down from 4.4% previous. Canadian economy has been quite strong on GDP, so we might see an expectation of a better figure or better than expected jobs number on the unemployment rate and also the net change in unemployment for the Canadian dollar. And if we see that, then obviously that should be taken as bullish for the Canadian. So you would look at selling the USD CAD in that instance. Obviously that would place bearish pressure on the US against the CAD. Okay, so heading forward to the markets today, we take a look at the AUD USD, the pound against the US dollar, euro against the US dollar, USD against the JPY, crude oil, gold, S&P 500, 200 rather, and the sterling against the yen. So those are, broadly speaking, the pairs that are contained in your daily technical report. Saw a fair bit of weakness from a top in the market on the Aussie dollar at 0.8060. And we did actually send out a text alert earlier today on this front. There's pretty compelling data to suggest that there might be further bearish pressure on the Aussie from that top. Aussie's had a very, very hard time sort of breaking out of the range generally between 79 and 80 at the moment. It did make an impressive move and a jump here. We might see that again. You can't rule anything out. But for the time being, we have hit a top in the market convincingly here. And can we, from the recommendation, look at additional shorts anywhere from 79.20 down to 78.80, an extension just below this level here. Similarly, we're looking at additional strength on the pound and the euro against most of the majors, against the US dollar rather. The euro's been a quite an impressive performer of late. We're coming into a bit of an oversold condition here on the daily chart and on the 4-hourly time frame, suggesting that we could have a look at under these conditions, have a look at a bit of a reversal. A lot of traders are actually aiming for targets in excess of 118.50 on this pair. Similarly with the pound as well, a lot of traders are actually aiming for targets of 132.40 in extension. And obviously hedging their bets against obviously a weaker US dollar. In this instance, we've seen a bit of a top in the market achieved here on the 4-hour time frame. And potentially have a look at a top in the market being achieved on the indicator here and looking at additional bearish pressure prevailing. So we're still a pretty strong downward trend here. We see a clear break above that line and further higher highs succeeding after that. We could see a bit of a reversal of the US dollar. But as discussed before, there is a lot of political turmoil in the US with Trump's leadership constantly under the microscope. And obviously a lot of tax reform and Obamacare issues and healthcare reforms still waiting to be passed. So a lot of instability in the market. And fear being more powerful than greed in a lot of circumstances leads to obviously more bearish pressure in general in the market on a pair. So we look at additional targets in this scenario, probably where it's tested before at 110.10, just below this level here. Similarly with oil, oil's hit a pretty convincing bottom in the market at the moment, rejecting the trend line of the 50-period EMA, suggesting that a test of this level is pretty strong as an area of support. Probably be looking at a bit of further upside on this 4-hour chart, seeing as we've had a low under similar conditions. We've had a low on oil here. Some OPEC announcements coming up shortly, but suggesting that further upside could be possible in this area. And generally speaking, with gold, as we said before, there is a very strong inverse correlation between gold and the US dollar in general. If we're bearish on gold, then if we're bearish on the US rather, then by rights we're bullish on gold. There is an inverse correlation near to 100% on these two instruments. Had a little bit of a tail off. Had quite successive higher highs and higher lows on a 4-hour chart here. Remember, one very powerful strategy that you can actually adopt is, when you're looking to buy in gold, it's not advisable. We use stochastic indicators a lot of the time to, give us a clear idea of overbought, oversold levels in the market. Now, if we were to buy at these sort of overbought levels here, then that would suggest that we're coming in at the wrong time. We want to wait for these retracements to occur, like here and here, before we come back into a buy. So it might be, again, yet an optimal time to come into a buy situation on the gold, seeing as we've had this broad selling pressure ensuing over the course of this week. It's come down from a top of around about 1270, currently trading at 1265. Could see a little bit of a reversal happening here, and then gold pushing back upwards to, areas of 1270 or 1280 in extension. Had a lot of consolidated activity on the S&P 500, S&P 200 rather. Had a very, very tight range market. In fact, you can almost see that, you get this step pattern happening here, with tops in the market around about 570 and 5660 as a low in the market. Possible to assume that there would be further selling pressure. S&P has probably been, unfazed by otherwise big moves on Wall Street. We have record highs on the Dow, also on the Nasdaq as well, the technology-based index. And usually that translates into strength on the S&P. When there's good news coming out of America, then the Aussie economy or the Aussie 200 would follow suit. But there has been some broad selling off pressure here over the last couple of days. Probably see the zigzag pattern happen for quite a while until there's such a breakout of these levels above here at 57800. Similarly with the pound as well, we backed the pound against the weaker US dollar just here. It's probably expected to sort of gain a bit of upward momentum as well against a weaker yen. Definitely to levels of if it were to go up to 148.60, and then we'd be looking at additional targets of 148 in extension. Now this will largely depend on NFP data as well. If we get a general indication that NFP is worse than expected, then that would already add to an already weaker US dollar against most of the majors. Judging by the previous ADP report that came out, which forecasted 190k jobs, it's a little bit better than forecast on the actual figure that's expected at 180k. So we could expect that to see, sort of push that, to the north. It's entirely possible. But for tonight, we're looking generally sort of at most of the daily technical reports are suggesting further strength on the majors against the US. Technically, that makes sense as well on most of these indicators here as well. Just in summary, at the conclusion of the webinars, I like to add a handy resource for each and every one of you, just to use in conjunction with your daily technicals or these charts or whichever you're using. We have investing.com, which is a free resource, not affiliated with ForexCT, but it is available to you to investigate. And if you go to technical summary on investing.com, you'll be able to see clearly the daily, the hourly, the 15-minute, and the 5-minute preference for each individual pair. And by clicking on that individual pair, like the Euro US dollar, you can bring up all sorts of information in relation to general chart, news and analysis, technical and forums about this particular pair as well. But it's very handy because rather than analysing it yourself, the moving averages, the technical indicators, the monthly, daily, hourly, 15-minute summary has been presented for you, okay, to actually say, which side of the market's on, is it bullish or bearish. So if you need a little bit more sort of exploration on that, you need a little bit more training or introduction to that, please let your account manager know. We'd be happy to go through it with you. It's not a product that's affiliated with us, but it is consistent, in its approach about telling you the indicators and what the preference is. So that's just a brief wrap today of what's moving the market, guys. We'll keep you updated on tomorrow's webinar, of course. If you have any questions about any of the trade setups presented tonight, please contact myself or your respective account manager. But thank you very much for your attendance, and we look forward to seeing you at the next webinar. Thank you. Cheers.